Hey everyone, hope you're having a great day, and welcome back to Whiteboard Invest Crypto News. Let's dive straight into today's top stories shaping the cryptocurrency landscape. First up, Bitcoin's showing a bearish bias. The increased retail activity and nearing end of minor capitulation are positive signs. Next, Saylor highlights Bitcoin's dominance over other assets, and Bitcoin's future amid potential Federal Reserve rate cuts. Meanwhile, user loses $11 million to crypto phishing scam, and about altcoins, PEPE price recovery delayed, despite preventing a major drop, and 7 trillion Shiba Inu, SHIB, turn into 749 billion. Last but not least, 19 million Chainlink tokens transferred to exchanges. All right, dive in the details right now. Bitcoin's trading at $64,280, just below the $64,500 pivot point, showing a bearish trend. Key resistance levels are at $65,000, $65,700, and $66,500, while support levels are at $64,000, $63,500, and $62,900. This sets the stage for potential price movements. What's exciting is the rise in retail investor activity. After Bitcoin hit $73,738 in March 2024, individual demand shot up. Recently, retail on-chain activity has increased by 7%, a good sign for market stability. Analyst Axel Adler notes this retail interest is promising, though predicting a full recovery is premature. Meanwhile, big players reinvesting their gains can help stabilize the market. Mining insights from Willy Woo are crucial too. He highlights the ongoing capitulation of inefficient miners, which usually happens after halving events. This process is nearing its end, potentially signaling a new Bitcoin rally. The Relative Strength Index, RSI, at 47.8, and the 50-day exponential moving average, EMA, at $64,500 reinforce the current bearish sentiment. But these are just part of the bigger picture. In summary, while Bitcoin's showing a bearish bias, the increased retail activity and nearing end of minor capitulation are positive signs. Keep an eye on those key levels and stay informed. Michael Saylor recently shared on X, formerly Twitter, how Bitcoin has outshined every other asset class, boasting an incredible 21,372,237% return since 2011. This dwarfs the returns from gold, tech stocks, and others. On average, Bitcoin has annualized returns of 148%, making it the top performer. However, in the current halving cycle, Bitcoin's performance has been lackluster, trailing behind MicroStrategy stock and various mining stocks. After Bitcoin ETFs launched in early 2024, the price hit an all-time high of $73,137 in March. This was unusual as it surpassed the previous cycle's peak before the halving. Currently, Bitcoin is down 12.73% from its peak and recently dropped below $64,000 for the first time in over a month. This slump is due to significant outflows from crypto investment products and ongoing inflation, which hinders further rate hikes. In a recent video, crypto analyst Lark Davis tackled what could happen to Bitcoin's price when the Federal Reserve cuts interest rates. Davis explained that historically, rate cut cycles, which last about 26 months, usually boost stock markets if the economy is strong. However, if these cuts happen during a recession, markets tend to struggle. He noted that different assets respond uniquely. Bonds often do well, while stocks and real estate benefit long-term. Despite predictions of a 2024 recession, current indicators show a lower chance, with bank rate lowering recession odds to 33%. The Fed has kept rates between 5.25% and 5.5%, cautious due to inflation. Davis highlighted Bitcoin's close ties to global liquidity, noting that the global M2 money supply hit $94 trillion, which is good news for Bitcoin. Historically, Bitcoin thrives with rising liquidity and falling interest rates, hinting at possible new highs by 2025. Demand for Bitcoin ETFs is also tightening supply, with ETFs in early June accumulating more Bitcoin than what miners produced. Davis suggests this could drive prices up, especially with a potential supply shock around January 2025 as rate cuts kick in. While the immediate reaction is uncertain, the long-term outlook for Bitcoin remains positive, and staying informed and strategically positioned is key for investors. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. A MakerDAO governance delegate recently lost over 11 million in AETH-MKR and Pendle USD tokens due to permit phishing, according to Scam Sniffer. The phishing attack exploited EIP 2612, which allows interactions with smart contracts without prior authorization, making it easy for attackers to obtain authorization signatures without on-chain transactions. Victims can unknowingly sign permits for malicious websites, granting attackers control without the need to broadcast to the blockchain. This incident highlights the risks of permit phishing, where bad actors deceive users by posing as legitimate sites. Blockchain security firm SlowMist points out that detecting compromised signatures is tough because these transactions happen off-chain. They emphasize the need for better user warnings and awareness to prevent such significant losses. PEPE, a meme coin, is trying to recover after a recent price drop but faces tough conditions. Despite a slight uptick, the Relative Strength Index, RSI, sits below 50, indicating bearish sentiment. PEPE needs the RSI to climb above this threshold to signal a potential rally. Another challenge is profit booking by investors. About 26% are currently in profit, likely prompting some to sell and pressure the price further. Currently trading at 0.1173, PEPE is just above a critical support level at 0.1146, crucial for avoiding deeper losses. Last week it almost dipped below 0.1007, highlighting the importance of maintaining above this line for any hope of recovery. Shiba Inu's market health hinges heavily on whale tier transactions, which have recently seen a sharp decline, dropping below 1 trillion tokens from a peak of 7.49 trillion earlier this week. According to Into the Block, only 45 large transactions were recorded in the last 24 hours, down significantly from 285 transactions on June 18th. This decrease underscores reduced activity among major investors, who typically drive significant market movements. It's a worrying sign because fewer large transactions suggest dwindling confidence or interest in Shiba Inu. The token's price has dipped below key moving averages, and technical indicators like the RSI indicate oversold conditions on low trading volume. With moving averages trending downwards, the market sentiment appears bearish. This decline in whale activity not only impacts SHIB's liquidity, but also raises concerns about its ability to withstand price volatility without robust investor support. Chainlink, has been hit hard by recent bearish trends in the cryptocurrency market, losing nearly 10% of its value over the past week. This decline reflects broader market sentiment, where sellers are exerting considerable influence. Analyst Ali Martinez noted a significant uptick in Link tokens moving to centralized exchanges, signaling a potential increase in selling activity. Specifically, over 18.77 million Link tokens worth $256.2 million were deposited onto exchanges in a single day. Additionally, Spot On-Chain reported the unlocking of 21 million tokens, with a substantial portion ending up on Binance. This influx into circulation could inflate supply and exacerbate selling pressure, increasing market volatility. Currently trading around 13.6, Link faces the risk of further declines, potentially revisiting the $12 price level if selling momentum persists. These developments underscore the precarious position of Link amid ongoing market uncertainties and investor actions. All right, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.